Hi, I'm Whack.
Hey, and I'm Pat. Thanks for joining us for another episode of the Weekly Orbit this week ending Friday, December 13th. Friday the 13th for all you people out there who think it's jinxed. Thanks for joining us again. This week we're going to talk markets. We're going to talk rETH. We're going to talk some whether V10, the version 10 reward tree will be out this reward period, and all kinds of other stuff. So we'll get to it. How you doing, Whack, today? It's a Friday the 13th. Are you superstitious? You think that's bad?
We actually got married on the Friday the 13th, so
it's been working.
Yeah, it worked out quite well for us, so it was not too bad.
My grandma, she retired in Fort Lauderdale, in Florida, like a long time ago, and I remember visiting her as a kid. And in her condominium, they went from floor 11, 12, and it skipped 13 and went to 14. So back in the 60s, when they built all these condo towers down there, they were suspicious. No one wanted floor 13. So, yeah. It's just another number if you think about it.
Absolutely, exactly.
Yeah. So this week, we had a little bit of a correction right after we recorded last week, Whack. Markets kind of tanked. We kind of flushed out some leverage. And we've kind of bounced back. So I remember last week, we were right around the 4,000 mark, and right now we're at 3,922. If you look at how we are on the week, I think we're actually up 1.5% the last 7 days. So I guess it depends on which time of day they start measuring that, because I think we were just under 4,000 a week ago.
Yep.
But the kind of the big story with ETH this week, Whack, has been the ETF inflows. So starting on December 9th, which was Monday, we've had 9-digit inflows, net inflows into Ethereum ETFs. We had 150 million on Monday, over 300 million on Tuesday. We had 100 million on Wednesday. Wait, did I do that right? No, I think I'm mixed up. Monday, Tuesday, Wednesday, Thursday. Monday was 150. Tuesday was over 300. Wednesday was 100. Thursday, 274 million yesterday. So that's a big trend. We haven't really seen it reflected in price necessarily, Whack.
Yeah.
Well, let's talk about that for a minute. Why is that? How can we have 9-digit inputs all week and the price has been kind of flat? What's going on?
So this was actually an issue the Bitcoiners were going through some months ago, and before we had this issue, because we just had outflows. But what was happening was, it looked like people were going long spot. And long spot just means that you take a position in the coin, so you buy that coin, then you're going long on it. You think the price is going to go up, and when you go short something, it means you think the price is going to go down, so you sell it. So what people did was they longed Bitcoin spot, so they bought it in the ETFs, and then they went to the CME and other places where you could short Bitcoin futures, and they were shorting the futures. And this is called a carry trade. And I'm not exactly sure of the full technicalities of how it works, but basically what happens is, you get a neutral position on the price because of it going up or down, like you still make money from it. And then there's some way within that you can make money. And I'm not sure exactly what the technicalities of it are, but it looks like that's what's happening with ETH right now as well. It's like, we're getting these millions of dollars, billions of dollars worth of inflows coming in, but the price isn't moving. So people are like, what's going on? And what's happening is, if you have a look at the CME dashboard, you'll see that ETH open interest is actually at the all-time highs. That means there's more people taking positions in the CME now than there ever have been in the past with the ETH. There's over 1 million ETH that's in an open position. Now, an open position just means that people are either buying futures that are long, like they think the price is going to go up, or they're buying futures that are short, where they think the price is going to go down. But it looks like and this is just a bit of my speculation, is that at least a bunch of this ETH that we're seeing here is being shorted as a carry trade. So that's why the price isn't going up. But with Bitcoin, what we saw is that, the longer you keep this bubble kind of down, at some point it's just going to, you can't help it, it's just going to blow up and it's going to rise. And I think that's what's going to happen here.
That beach ball you're kind of pushing underwater.
Exactly.
And when you're a kid in the pool and you're trying to push it, and then all of a sudden it pops right up. Is that what's going on here?
I think that's what might line up for Ethereum as well. And what's really interesting is, one of the worries that people had with options on ETFs, the Bitcoin one was approved a few weeks ago, is that it could lead to like a squeeze position where people would short it and then the price would go up so much that it would lead to corrective behavior. And that like that would be the most incredible like short squeeze, like a gamma squeeze. That's what they call it. Is when the funding you're gonna get shorted. Basically, the price moves up so fast that your short gets liquidated, and then short cascade happens. So with this in mind, like I don't think the futures like liquidations happen in the same way, but it's risky in a bull market like to be shorting anything. But these guys get paid millions of dollars, right, to take these positions, and I'm sure they understand them much better than I do. But all I know is that like when ETH starts moving, it's going to start moving really fast.
Right, that makes sense.
Yeah.
Another thing is, I assume a lot of this is probably over the counter, where some of these firms that are supplying this ETH to Fidelity and BlackRock and Bitwise, they've already got their kind of hoard of ETH that's being plucked away. And they might be just selling the ETH from their reserves. And at some point, they have to go back on the spot market and get more. And there might be a little lag time in there, without knowing, the OTC inventory. It's hard to know exactly. But I assume some of what we've seen is also that, where they're just, we haven't seen it reflected necessarily, and maybe you won't. It's not going to be a day-to-day perfect correlation where, those 200 million in inflows, so we should see a bump up. Because I remember one of these days, I'm not sure, maybe it was Monday, the market was actually, ETH was down, but you look at the inflows, you're like, wait a minute, 150 million in net inflows, why did it go down? And then there's other explanations. Over the long run, you got over $1 billion basically in a week in inflows. If you're pulling that off every week, at some point that beach ball is going to bounce, right through the water and hit you.
Yeah, and I've been saying for a while that I think that moment is going to come in the first week or two of January. So that's what I'm waiting for.
Yeah, speaking of that, we're going to do a predictions episode in a couple of weeks, end of year. We're going to look at last year's, and then we're going to talk this year coming up in 2025. That will be your first prediction, that we're going to see an explosion come the first week or two of January. So we'll get back to that later. Let's see how Rocket Pool's doing, RPL. Today, right now it's $15.63. It's had a tough week. It was down 12%. In the last 2 weeks, it's up 12%, so kind of about even. So if we remember, it had quite a run there. If we go back to the month chart, you can see we blasted off. We were under $10 back in mid-November, and now we're up to 15. But RPL still holding its own. If we take a look at the broader small cap big market, which excludes the top 10 here on TradingView, the last 5 days, ETH is down. It says here 2% in the last 5 days. The rest of the market's down 5%. And RPL, it says, down about 9%. So it's kind of a beta play. As the markets move a little bit, it's going to either go higher or lower than the general market. And we're kind of seeing that too. Yeah. Any thoughts on RPL real quick?
Yeah, so we got back down quite hard, more than the coins. Like when ETH went down like 5% or 10%, RPL was down 20%. Like it got hit really hard, and you can see that on the left side of the chart on the screen. Is that that downwick movement was a lot stronger. However, since then we've actually recovered quite well, and we've moved up quite well. We're not quite up to outperforming the rest of the market. We've had a bad week in that sense, but you have to remember, like last week, RPL really outperformed the market. Like it did really well. It had a very, very strong week. So I think it kind of makes sense to have a little bit of a cool off. But I'm really looking forward to like the next move up. And I'm hoping that'll take us into like the 20s, because we went up to $19.90 last week, which was a really, really nice move up. So if we get another good move from here, we could potentially end up somewhere in like the mid, well, hopefully in the 20s. Like if we get a good weekend, and then early next week we could be in the 20s. Hopefully that would be really nice to see. But yeah, the tokens, everything's moving quite nicely, like overall, and crypto's getting hot. So this is the home stretch.
Do you remember the days of people complaining about $30 stablecoin, or the $30 RPL stablecoin? We were just always around 30 bucks, 29, 32. And we used to make jokes about as 30. Now I would love to see $30 stablecoin back. I'll take 20 to start with, right?
A $30 stablecoin right here would actually be really good to see. You're absolutely right. So yeah, let's get that back.
Yeah. Well, so I think what shows we had our exuberance last week, and the markets aren't always up and to the right.
Yeah.
There's little corrections in between, and I think that's healthy too, because it's good to flush out some leverage. I think every so often, as it kind of keeps the market from just overheating too much too soon.
Yeah.
And over time, we want to see it up and to the right, but it would be. I think it's just better that we make incremental, but it might just blast off, as you said. We blast through this. Of this, what you were just talking about with the carry trades, and so we'll see what happens. But
Yeah, exactly. I think good things ahead for ETH and for RPL.
great. Let's take a look at the deposit pool. Just on check out our. Should we? Yeah, I think we should. We're honest brokers here.
No, it's scary.
So on the week, we're up at 189 ETH. Week before that was 549, and so on. We are. It's kind of the same story. Things are trickling in. But there is hope on the horizon. We've talked about the last couple episodes, the rETH growth incubator. That's moving along, and kind of we're following the same pattern that led to Saturn. If we recall, we were going through this exercise last November, December, January, where the community was asked, "Hey, how can we grow the node operator side of the rocket pool equation?" And Saturn came out of that, and so that was, I consider, a big success, and we're following the same thing here with our ETH growth. So, but this is the facts where things are trickling in. LSTs generally are having the same issue across the board. Any thoughts on the deposit pool?
Yeah, so the deposit pool, obviously, like we explain every week, the reason why it's not getting these inflows is because there's a depegged on the downside. Our ETH is a discount compared to the protocol price. So what happens is, if you want our ETH, it's more cost efficient for you to just go to the secondary market and buy it in cow swap instead of coming to Rocket Pool and buying it in the deposit pool. So that's one of the things. The second thing about the incentives that you were saying is actually that's really close now. The GMC is actually sending out $1,000 worth of incentives today to Contango. Contango is a service that will let you loop your rETH. So with it being a discount on the secondary market, it means that you can buy rETH for cheap. So what could happen maybe is that people will buy rETH on the secondary market, go to Contango, deposit their rETH, get ETH in return, swap it again on the secondary market for more rETH, and then deposit it again. And the GMC is obviously going to be incentivizing this. We're also getting co-incentives from Contango themselves, I believe. And the reason why we're doing this now is because it actually came up as part of a grant that we approved last month, which was a stash of funding to pay for incentives that the IMC is not allowed to pay for. So the IMC, according to the charter, is not allowed to pay for incentives that will promote the minting of rETH. Like, they only do that through liquidity as a secondary consequence. But the GMC, being persuaded by alpha growth, saying that there are a lot of opportunities on the table. If you can put money towards it, the other protocols will put a lot of money towards it. And they raised, they got a lot of OP tokens set aside for this. So hopefully, the yield will be really good, and it will mean that people will want to mint rETH and then go deposit it. So what might happen is you won't see the deposits necessarily coming into the deposit pool, but hopefully in the first few days, we should get closer to peg or back to peg. And then after that, hopefully we'll start seeing deposits coming through. So this is definitely something to keep an eye on, because there's some interesting dynamics at play. But we're working on this. Like, we're not sitting still, and the incubator outcomes, they're already going through the stages where they're now getting put through as bounties, and the work is going to start getting done on these. So we're moving. It's just sadly sometimes things move a bit slowly. We really should have seen this happening months ago and tried to take proactive action instead. But hey, hopefully not too much is lost, and we can still move forward from here.
Was the Cotango relationship, is that something that came out of the alpha growth marketing, or did Cotango contact Rocket Pool directly? How did that come about?
I kind of happened that the Contango came into the IMC public discussion thread, and we're like, hey, we've got this tool. Do you guys want to use it? And we were like, we can't really use that. It's against our charter. And then I think they started talking to the alpha growth guys. I'm not sure exactly what the steps were behind the scenes, but then we realized that the GMC could fund it if we set up a new fund for that. So then that's why we set up the new fund for that. So hopefully we'll start getting some good results from that fund.
I imagine the yield would be good. You got the discount, one. Number two, you have RPL incentives that the GMC's authorize. And number three, you have Cotango with OP tokens as incentives. So you combine those three things, I would assume the yield would be pretty good out of the gate.
Yeah, that's the hope. But there's actually some worries about looping right now because Aave, as you might know, is going absolute gangbusters. And they can't keep up with the amount of demand there is for Aave right now. And because of that, the ETH yield and borrow yield and the supply rate is so high that looping actually isn't profitable using Aave right now. So if you are supplying ETH, you're paying around 4%. And if you're borrowing ETH, you're paying around, if you're supplying ETH, you're getting paid 4%. And if you are supplying ETH and you're paying 6.5 or something like that percent. If you just click on the Ethereum part, the numbers have gone down a little bit. So supply is 2.8% and the borrow is 2.7%. But what happens is like if the rewards are less than the staking rewards, like the way it works out, it just becomes really difficult to do that.
To loop.
Like a lot of people who had looping positions over the last few days or weeks, there were moments where they were like unprofitable with that. So that's going to be something to keep an eye out on as well, because sadly with Rocket Pool, like whenever we try to do something, we always do it at the wrong time and we just get hurt. Like, do you know what I mean? Like, I feel like it's happened so many times where we've tried to like go out there and do stuff and it's just not worked out. So hopefully this situation will be a little bit better, and I'm hoping that we can take advantage of this and get a few thousands and thousands of rETH minted because of it.
It's going to take a bit, but if you look at the rest of these LSTs, you got rETH at 0.24 discount. You've got XRETH at a discount. You have wrapped STEETH, which is Lido 0.117 discount. SWETH, that's Swell, right? Swell ETH at 0.285. CBETH, Coinbase, is We're right kind of smack in the middle between all those. So we're better than Coinbase and Swell, and within shooting distance of STETH and Lido. Yeah. So it's a lot, but we're looking a lot better and healthier now than we were a few weeks ago, when the discount was like 0.8%, I think it was. It got up to, right?
Yeah.
So that's kind of approaching the danger zone.
The problem, though, is that we're getting back to peg by people leaving. Exits more than minting happening. So that sadly is the worry. But I think it's like one of those situations where the sooner you get back to peg, the sooner you can actually start doing positive things. And we need the positive things happening right now. So maybe the short-term loss will work out in a long-term gain, but we'll just have to see how it goes.
Certainly. Okay, on our next item, we've got a Smartnode update. Fornax posted here in the Discord, releasing version 1.15.0. It's recommended. It's got some client updates and new features. DAO and nodes have to update it. And it includes updates to Geth, Nimbus, Teku, Lodestar, and rETH. It also implements the rewards tree version 10, which is encouraging. We're going to talk about that in a second. And also it has a new field for suggested block gas limit. Let's talk about that for a minute. Right now it's default. There's been a lot of talk in Ethereum whack about increasing the gas limit on the L1. And essentially that's the kind of the ceiling for how many transactions we can include in every block. And we've been at 30 million for about 3.5 years. And there's talk of, hey, can we carefully, assertively increase this so that we can put more more transactions in each block and expand the L1. So right now it's at 30. This will allow you to play with it, this suggested block gas limit field. But there's some news on this. It looks like quite a bit of talk on crypto Twitter, including Justin Drake. He says here he supports, and he's increasing the gas limit to 36 million. So that's a 20% increase. Some people have talked 60 million, which would be a doubling. So you want to talk about gas limits here for a moment and the Smartnode update?
Yeah.
What do you think? Should we raise the limits or what?
Yeah, so I'm kind of torn. Like, I feel like the Ethereum scaling roadmap is about scaling L2s And with L2 scaling, what you want is, you want them all to have the best access to blobs. You want blobs to be working well, and you want all that good stuff to be happening. And so far, that's looking quite good. So, yay. The problem is that with a certain mindset, then layer one just becomes like a settlement layer. It's just like, oh, that's the place where the blobs go, and like nothing else. Basically, everything else happens on L2. I think that's kind of a short-sighted way of looking at it, and I like that we're kind of addressing L1 as well. But I'm kind of torn about like what the best way to do that is, because I really like the roadmap. I'm really excited about all the really cool things that are coming with there, with interoperability and like growth and all these new teams that are going to be deploying L2s. The I think the most important thing from this whole situation is that it sends a message saying that Ethereum is still willing to grow, Ethereum is still willing to get better, and I think the cost of that might come to home stakers with this, with the state getting bigger and just becoming that's slightly a bit more difficult for node operators to work from home. I think it's worth the cost of it, but there's going to be some interesting changes coming up in the future, which will make all this moot. So as Justin Drake mentions here, like we're in a position where we could do 1,000x scaling in a few years' time with snarked proofs basically, and using that instead. So that is the goal. So I think whatever we do in the meantime is just kind of like a little bandage. Do you know what I mean? Like just to kind of keep it going. From a technical perspective, I don't think it makes too much sense. From a marketing perspective and from like a signaling perspective, I think that's where it makes the most sense. So that's why I'm in support of doing it. And I even on my node I changed the flags so I can I now have 36 million gas. And I think this is good because in another couple of months we can move it up again another 20% and again another 20%, as long as everything's working okay and everything looks fine. So far, like before, when Justin Drake had made this post, we had around 2 or 3% of the network that had upgraded. However, yesterday there was a new Nethermind client out, and that defaulted to 36 million gas. So Nethermind is about 35 to 40% of the network right now. So we might start seeing some really good numbers coming out for people who have updated their gas amount. Now, what we need is like Lido or Coinbase, to come out and say this is what we're supporting, and we want the gas to go to 36 million. Because unless those services come out and do that, then we'll just have to wait for gETH to make it like a recommended. Like it'll come with that as a default option. Once that happens, then that's it. The game's over, right? We need 50% of the block builders to be on 36 million gas, and then we need the builders and relays to adopt those as well, and that's when everything will work fine. Yeah, I think it's a good thing. I think it shows that Ethereum's still willing to adapt and grow and move, and we really need that this time. So the cost is less than the positive messaging I think that'll send out.
Right, and like I'm one of those guys who've got a 2 terabyte hard drive or SSD on my node. So increasing the gas increases the state history, which increases disk space, and it's going to affect people on 2 terabyte more than someone who's on say a 4. Right.
Oh yeah, for a 4 it's no issue at all, right? Like right. You could double the gas and you'd be fine pretty much. For the 2, that's an issue, because on May 1st, we're going to remove some of the history that our validators are going to have to carry from everything before the merge. So that's going to remove a lot of space from our hard drives. The question is, can we make it to that point with 2 terabytes? So hopefully. I think people are already looking at shopping for the 4 terabyte ones, because the last thing you want is your hard drive just fill up with space. It just becomes really difficult to like do stuff. Yeah, that's the thing. Like, will we need to go to 4? I guess we'll find out.
We'll find out. Yep.
Yeah.
I might need someone to help me upgrade that. Some non-tech person like myself might find it difficult swapping out SSD drives.
Oh, it's really easy. I'm non-tech and I can do it. It's not hard.
Okay, that's
I'll make a video if you need to.
The other thing that this upgrade does in the Smartnode is it implements the reward tree version 10, and there was a discussion about that. Hey, is it going to be ready? And it seems like the answer is 90% yes from patches.
Yes, because it's in the update. This is from before.
Oh, this is before. Yeah, that's right. Yeah. This is December 9th. Yeah. So it is going to be in. So just a reminder to folks, what does that mean? Why is this V10? What's it going to do? And why should we be happy about it?
Yeah, so V10 is a new way of calculating monthly rewards for node operators in Rocket Pool. And the reason why this is important is because after the Saturn Zero upgrade, we changed how rewards are calculated in that, we will now have 5% commission that will come from the contract and 5% commission as a base will come from the smoothing pool. And then there'll be up to 9% that will come from there if you have RPL staked. So the math for this got a little bit more complicated, and we had to work out the best way to calculate everyone's rewards. And it took a little bit longer than expected. And we missed last month. So that means last month, anyone who started a new Saturn Zero validated last month only got 5% commission on their node instead of 10 to 14% commission on their node, which was nice for the rETH rewards people because they'd paid less commission, but they only paid 5% instead of 14% what they were paying before. For those new node operators, everyone else who was locked in was locked in. But what this means is that basically we're going to be calculating the rewards properly for new validators that have come on, and we'll be giving them all their fair share. So this was part of the RPIP 60, I believe it was 60 RPIP 60 for Saturn Zero, and we said that we'll do it after missing one rewards period, hopefully within that period. But if we needed longer to make sure everything was done right, then we would take longer if we needed to. And thankfully, it looks like it's all good. Talking to Patches, he thinks that he's already thought of some optimizations that can go into rewards tree 11, so it'll make things better and more efficient, and that's definitely good. Cool. But we've got 10 now, and it looks like we'll be going forward with 10.
So does this affect anybody who say they didn't start any new validators after Saturn Zero, but they were under the cliff? They say they only had 5% collateral on RPL. Are they getting rewards now?
They actually got rewards last month as well. So everyone got RPL rewards last month. The RPL reward calculation is slightly different, so that was fine. It's just the ETH one was the one that we needed a new tree for.
So the V10 is just really applies to the Saturn Zero ETH only validators that came online.
So actually not just the ones without RPL. Like you could have RPL as well. It's just if you started after Saturn Zero, then you're a new validator type, and that's the ones that impact. Those are the ones that are impacted by this.
Okay, cool. All right. Do you have any wins for the week?
Yeah. So last weekend just gone, I was in Chicago to do our annual Chicago meetup. It's nice. It was year 3 this year. The turnout was a little bit smaller than I'd hoped, but it was actually absolutely wonderful. Like I got to spend a lot of time with Patches, and there were a few other Rocket Pool community members there as well. There was Marceau and Thomas and Superfizz, and it was really nice that we all got to hang out and talk about crypto. Yeah, some of the things that we talked about will remain in our private threads, but we're all looking forward to 2025, let's just say. Some of us are more excited about it than others, but we're all excited about it.
Did you guys have Chicago pizza, or what you do?
We had deep dish pizza again from Gerardo's. We actually went to the same restaurant we went to in year 1, and then it was the same restaurant but a different branch in year 2, and then in year 3 we went back to branch 1. So we were talking about mixing it up potentially next year. So maybe we'll go somewhere else, or maybe we might even end up in a different city, or we'll probably go to a different restaurant. But Patches and I have our own little tradition now where we meet up the night before the main meetup, and we just kind of hang out for a bit, and that was nice as well. So he was putting some pictures on in trading in the Discord, and that was really cool. But yeah, that was my win for the week, just to spend time with like-minded people and really really good friends who I don't get to see that often. So yeah, that was my win for the week.
Well, maybe next year when RPL is triple digits, you guys will just buy the pizza joint.
Hey, well, I think some of the people at that table could probably buy it now, so they don't need to wait.
That's great. My win for the week. So I've had a pretty tough week on a personal level. My partner's mother, who's been living with us the last few months, she passed away Wednesday. She was in good health, pretty good health, and she went in for a procedure that unfortunately went sideways. And so my win, the win isn't that she died, but the win is just I know. The win, I'm getting to it. The win is just seeing, family. She's Indian, and the Indian families are really tight. And we had 10 people at the house came in for it, and they're like, hotels? What are hotels? We don't know that. Let's get some air mattresses. And we had people sleeping on the floor. and it was a hotel essentially. But it's nice to have family come together at such a time of loss. But also,
Yeah.
one thing was I got to spend time with her over the last few months. Lots of conversations, got to know her really well. She was a great woman, one of the best humans I've ever met. And she was very Catholic, even though she was Indian. She was very Catholic, and her faith was really important to her. I took her to Mass the night before her procedure, and I didn't think this was going to happen at all. But she was really, really happy to have that experience. And I was, looking back on it, I'm really glad that I was able to provide her with that. And so my win is for everyone out there. This happened with my father, too. My father passed away about over 20 years ago. And he used to say, every time I'd see him, I'd come home from college, do my laundry, and he'd always say, I love you, son. And I'd say, I love you too, Dad. Well, those are the last words I ever said to him, because the next day he passed away. This American machoism sometimes we have, like we got to be strong and you hold your feelings. Hey, the people in your life you really care about, the people you love, let them know that. The most masculine, strong thing you can do as a man is to take care of those that you love and that you're friends with, and let them know how much you care about them. And there's nothing more, I think, showing grace and showing your strength by telling someone how you feel and let them know, the family, that you love them. Because, hey, I got to tell you, nature and biology have a batting average of 1,000%. It's coming for all of us. You just don't know when that day is. And so let those people around you that you care, let them know you care, because sometimes it might be the last time. So that's my win. Let those people out there that you love know that you love them.
Thanks, Pat.
Okay. On that note, next week we'll be back, and we got the end of year episode coming up too, which I'm excited about. So stay tuned for that. Until next week, I'll see you, Wag.
Thanks, everyone. Bye.
Bye-bye.